Only back almost 1.5%. This after President Trump says Washington and interim leaders in Caracas, they reached a deal to export between 30 and 50 million barrels of Venezuelan crude that's worth between $2 and $3 billion to the U.S. The president says the U.S. will then sell that oil on the open market. This is President Trump reportedly plans to meet with representatives from Chevron, ConocoPhillips, ExxonMobil, and other oil majors as soon as Friday to, quote, discuss making significant investments in Venezuela's oil sector. Joining me now is Amrita Sen, founder and director of market intelligence at Energy Aspects. Amrita, good morning. Thanks for being here.
Good morning. Thanks for having me.
All right. So we're seeing the knee-jerk reaction to the idea of these 30 to 50 million barrels being put on the market. Longer term, how do you see this influencing oil prices? Is this making you change your targets when it comes to WTI in any way?
No, I mean, look, I think, Frank, the biggest thing is that the 30 to 50 million barrel tweet was also without context, right? We have seen about 11 ships being chartered by Chevron to go over to Venezuela just over the last day or so. So I think those flows will resume again. It had completely halted over the last couple of days. What I do want to stress is that those 11 ships are very much in line with exactly what the Chevron flows from Venezuela to the U.S. has been last year. It's not additional oil. The 30 to 50 million barrels could include those numbers. We don't know whether they include the Chevron numbers already or it's additional oil. The context is that they need to remove this oil, as in they need to be selling this oil, otherwise they would have to shut down more production. I think that's critical, right? So right now, Venezuelan production is under a lot of pressure because oil isn't flowing. This will allow some of that oil to flow and not shut in more. I think the critical thing, like you say, in terms of the investment and whether the companies are willing to actually go in and invest hundreds of billions of dollars. We've calculated just 500,000 barrels per day of increase in production would require $10 billion, right? I haven't sensed any urgency from any company to go back in there till the situation is so fluid. We still don't know who's actually in power. We don't know whether contracts will be actually upheld. The PDVSA debts, how will they be dealt with? So that's going to be a slow grind. All right.
I want to go to the oil majors. The president plans to meet with them. How attractive is this crude? I mean, we're seeing an oversupply of oil. How profitable could this oil be for them? Do they actually want to take it and refine it? I've seen some reports that this oil would go to some Gulf Coast oil refiners, and potentially that would be good for them. But for the broader oil market, what does this really mean to have this extra capacity?
So again, let's not get carried away. It's too premature to talk about this extra capacity because in the past, the U.S. has taken as much as 1.5 million barrels per day of oil from Venezuela. That was back in 1995. In the last 10 years, the maximum that's kind of gone to the U.S., and particularly the Gulf Coast, is about 750. But Lyondell, which is now a refinery that's shut down, used to take about 200 of that. So let's call it 500,000 barrels per day is what U.S. Gulf Coast refiners could take. They would want it because it's heavy crude oil. They are complex refiners, so they do want that, right? But I think the critical thing over here is that is this new production coming from Venezuela, or are we simply seeing flows that were going to China right now, which is about that 500 million barrels per day, get redirected to the U.S.? And I think that's very important for the global market. That is it a balance shift or a trade flow shift?
All right. Amrita, you're absolutely right. Context, nuance is very important when it comes to the situation. Again, we're all responding to a social media post, not a full-fledged policy. I want to ask you about something else. A report overnight about certain ships from Venezuela reflagging to Russia, basically looking for the protection of Russia. What does that potentially mean for the global oil market? The fact that these ships are looking to avoid any type of strike from U.S. forces and get that oil out to other countries where we may not want it.
Yeah, and I think this is why I'm saying that the situation remains very fluid, so let's not get too carried away. The fact is that Venezuela is probably still trying to sell some of its oil to China, which I think, let's see how that plays out. And the U.S. hasn't given up. And by the way, the blockade still remains in place, sanctions still remain in place. So the U.S. hasn't given up chasing some of these ships which got reflagged. And I don't think that saga is over yet at all. So yes, we're going to get some oil from Venezuela to the U.S., and those flows will resume. But the other flows which Venezuela is still trying to do through these reflagging, that's absolutely not certain. In the beginning, this is again why these companies, which would require hundreds of billions of dollars to actually change the upstream, I don't think they're in a rush because these things are still kind of being played out.
Amrita Sen, great to see you as always. Thank you very much for that context about this developing situation.